Traders, happy Sunday. I hope you all had a great weekend. Welcome to my weekly outlook. We're going to jump right into things. Just want to make a quick announcement and remind you guys that I'm going to be hosting an event in Phoenix on August 2nd and August 3rd, or August 3rd and August 4th. If you could check out, if you want to check out the link in the description, you definitely can. But before we start off today, I just want to thank you guys for your support. From the bottom of my heart, it really means a lot. It's really cool to see how involved you guys are and how much support I'm getting from these weekly outlooks. It's really cool. I've seen channels with like 10 times the amount of subscribers that I have, getting half the likes that I do on my videos. So it's really cool. I really appreciate the support, guys. Liking these videos means the world to me. And I'll remind you right now, if you're watching this live or if you're watching the recording, go ahead and smash that like button before we get started. We smashed over 50 likes on one of the previous weekly outlooks, which is pretty awesome compared to the amount of people that are watching it. So again, I cannot thank you guys enough for your support. But let's go ahead and get started with our weekly outlook. Absolutely no fluff today. It's just going to be straight. I don't think it's ever fluff. It's going to be straight value to you guys. I'm going to be showing you guys a couple reasons why I have the position that I do on a couple pairs. And rather than just saying, okay, here's my position, I'm actually going to be telling you guys why, among other things, okay? But without further ado, let's jump into it, okay? So economic calendar, as always, let's take a look at it. So for this week, I've already gone through it. There's nothing super crazy. It's a normal week, right? We're going to have GDP coming out this week for different currencies, CPI coming out this week for different currencies. Monday, we can see there's a meeting minutes being released from the RBA for the Australian dollar. We're also going to have Powell once again speaking this week. You guys know that he spoke 3 times last week, Tuesday, Wednesday, and Thursday. Well, Wednesday and Thursday was a testimony, and Tuesday he spoke, so he'll be speaking once again. One thing to mention is there are no interest rate decisions this week. On Wednesday, there is going to be some labor reports for the Australian dollar, and if you guys remember the last statement that the RBA gave out, they said that they were going to have a large focus and importance on their labor market. And that was just on the last statement that they released. So that being said, Wednesday evening evening if you live in the US, is important to be on the lookout for because this is exactly what they're looking for, right? This is all labor data. We have an unemployment rate being released, and then at the same time, the opposite of the unemployment rate, which is employment change, right? How many new jobs were added in the past month. But other than that, I'm not going to go over everything. There's some CPI coming out, like I said, for a couple different currencies this year. There's some GDP. I will mention this, though, because it is happening in 2 hours from right now. If you're watching this live, if you're watching the recording in a couple days or a day or so, it's already happened. But there is some quarter over year GDP, so gross domestic product, coming out for China tonight. Okay, now a lot of Forex quote unquote gurus, and these just idiots out there teaching Forex, like they won't even ever talk about the Chinese yuan because you won't find it on the charts, but it's still something important to talk about. It's what's called a fixed currency. It's not a floating currency. So there obviously is an exchange value, the Chinese yuan versus the US dollar, but that is a fixed rate. It's not so basically, it's not the rate doesn't change based on speculation like the currency market, like the rest of the currency market does, which is considered floating currencies. This is a fixed currency. But the reason why this GDP is so important, and write this in your notes if you don't already have this, but Australia is a direct correlator to China. Okay, so whatever happened, if you it just I don't have all the time in the world this is just a weekly outlook. This isn't like my education or my course or anything extra that I do, so I don't have all the time in the world to go into it today, but just know that China basically owns Australia, okay? If you live in Australia or if you've ever been to Australia, you'll know that there's actually laws and regulations that have been put into place in Australia because of how aggressive foreigners have come in, specifically China has come in and taken over things like the real estate market. And I mean, if you think about it, let's just be logical about this, guys, right? Australia is a small country. They don't have all the real estate in the world. Obviously, like there's the center of Australia, but nobody lives in the center of Australia, right? It's all just pure, just desert, right? It's not. I mean, it would take a lot of money and resources and a lot of time for us to start going into the center of Australia. So if you guys know about Australia, there's like an east side of Australia and a west side of Australia, and pretty much all of the main stuff: Melbourne, Sydney, Gold Coast, Cairns, Perth, Adelaide, all of these countries that are cities that you've probably heard of in Australia before. They're all found on the coasts, or are not super far inland. Okay, so that being said, there's a high competition for real estate. Real estate is a huge market in Australia, and you guys will notice if you've been to Australia that in big cities, let's say, or, not big cities, but pop-in cities or big growing cities, let's say like the Gold Coast, where I spent 6 months in at the later half of 2017 and 2018. It's just all sorts of skyscrapers and towers going up. Like I remember when I was living there for those 6 months, there was probably 24 cranes, over 20 construction cranes within a period of a couple miles, just building and building and building. They're building these giant 100-floor plus high rises, and they're hotels but in their residences and apartments. They're all sorts of stuff. So, and China owns most of that. Okay, so just know that whenever you see a number coming out for China, that it has a direct correlation to Australia. So basically what this means is that if we see the GDP come out bad for China today, that we're probably this week, or at least early on this week, over the next day or so, probably going to see a pair like AUD USD, which is the Australian dollar versus the US dollar, probably decrease a little. The price will probably go down a little bit where the Australian dollar is weakening. Okay, now let's just move forward. Okay, so that's just a little tidbit, guys. If just by the way, if you guys like how I present this type of stuff, you guys like how I'm explaining this type of stuff, I do a daily webinar every single Monday, Tuesday, Wednesday, and Thursday, every single week, every single year for the past 3 years. So I've done hundreds and hundreds and hundreds of daily webinars privately with my students, and I do it. Last week I did 4 of them. The week before I did 4 of them. The week before that I did 4 of them. Every single week, Monday through Thursday, I do a daily webinar. We sit down, we go over any open positions, we look at any new positions, we look at any upcoming news events, and basically the weekly outlook that I do once a week for free for you guys here on YouTube, I'm doing 5 times a week for my students, okay, or 4 times a week privately, and once on Sundays, okay. But yeah, shoot me a message if you want some more information on that. Also, smash the like button if you are getting some value out of today's webinar. But let's go ahead and jump into the charts, okay? So I have a bunch of different pairs over here to the right. You'll see gold, euro, USD, USD Swiss franc, dollar yen, and dollar CAD. And I'm just going to say this, is that if you have not been on the weekly outlooks, I would highly recommend probably watch. If you're brand new to my channel, just getting here, welcome, by the way. I hope you enjoy it. There's some really nice videos in the description, but I also recommend, so if you want to get up to speed with my bias, my longer term bias with everything, to go watch the past couple weekly outlooks, and I go in depth. But in short, I'm not gonna like punish all of my subscribers that stay here, and you don't have to listen to me talk for the next 20 minutes explain the same thing I've talked about for the past month. But in short, I am still short on the US dollar. Okay, I am only interested currently in finding positions to short the US dollar, okay? Whether that means to buy Euro USD or to sell USD Swiss franc or to sell dollar yen, it doesn't matter. I'm looking for a pair that offers a good risk to reward and goes in line with my bias of a weak US dollar, okay? And I'm not going to get too into it today. I mean, you guys should be following along with what has been going on with the US dollar, but if you were on last week's outlook, you'll know on last Sunday, we were expecting this past week Powell to come out and talk 3 times, last Tuesday, last Wednesday, and last Thursday. And what he said on his testimony on Wednesday is that the Federal Reserve is still dovish. They are still expecting a rate cut. Now, is it going to be 25 basis points or 50 basis points? We don't know yet. but that will come out on July 31st when they have their next interest rate decision. But you know, this is not new, right? I have had a bias. If you have been following me, or even if you're one of my students, you know that I have been looking to short the US dollar for weeks and weeks and weeks and weeks now. Literally months now, I've been looking to short the US dollar. We've been waiting in this massive distribution period that the dollar index has been going over, and we're just waiting for that markdown period to ensue. So that is what I'm looking for. You know, I'll just very quickly talk about the other pairs, and then I'll come back to Euro USD because that's my main focus, okay? And in short, it's going to be as simple as this. I think gold is going to continue moving up higher. It's going to break 1,500 at some point, but probably not this week. If anything, we might even see there's still a possibility for gold to dip down lower towards the major multi-year highs that it broke out of last year. Or I mean that it broke last year's and the year before's multi-year highs that it just broke out of a couple weeks ago. So this is the weekly. Everything we're looking at right now is the weekly chart, and you'll see like 4 weeks ago, gold broke the highs of 2018, the highs of 2017, and the highs of 2016, the highs of 2015, the highs of 2014, and the highs of, not the highs of 2013, okay? But from 2012 up until now, 7 years, we just broke 4 weeks ago the high of 7 years, okay? And that's marked off with this blue period. So there is a possibility that we could go and retest this area, but ultimately I'm expecting 1,500 to get hit. So whatever you need to do, write it down in your notes. David says gold 1,500, whatever, write it down. All right, USD Swiss franc, I am interested in downside on USD Swiss franc. I am interested in downside on dollar yen, and I'm interested in downside on USD CAD. Now, if you want some rough price targets to go off of, USD CAD will go to 129, okay? USD CAD to 129, so that's another 130 pips lower. Now, by the way, just a little disclaimer, I'm not saying that it's going to go to 129 this week, okay? This is my weekly outlook for this week. However, I don't have a bias for this week, okay? Let me just be clear. No pair this week do I have a short-term bias on, okay? Just to throw that out there. So sorry if you were hoping to get on today's webinar and me to tell you, okay, tonight go short this. No, that's not happening today. Not happening this week. Everything is strictly long-term biases. I am only interested in swing trading as of right now. With current market conditions, I am only interested in swing trading, okay? So USD CAD down to 129. Dollar yen will easily go back and break the yearly lows from the flash crash, which is 104. So that's another 300 pips lower. USD Swiss franc is just going to completely free fall. We're going to see it at least go down to like 95, 96 area. So that's a couple hundred pips lower. I just mentioned gold, and Euro USD is going to go up to 120. Okay, Euro USD is starting a major reversal. Now, I know a lot of you guys probably don't agree with me. A lot of you guys probably want to short Euro USD, and I mean, I guess if you want to do that, that's fine, but it's not a very smart thing, and I'm going to show you a couple reasons why. So, you know, there's a lot of like Forex gurus and stuff like that won't ever explain why. They'll just tell you and kind of like hold the secrets back. So, I'll tell you this, is that if you want all of my secrets of why I'm looking to long Euro USD, go watch like my past 10 videos, okay? I drop a little bit of nuggets in each of those little videos of why, and go a little bit more in detail each time of why I'm looking at buying Euro USD, okay? So you can get all of that and then add it to the other little nuggets that I'm dropping today. So I'm kind of like sprinkling the nuggets because, guys, I do not believe in spoon feeding you guys. If you want success, you want to learn how I trade, go put in the damn effort and go watch my videos, okay? Spend the time, go lock yourself in a room for a weekend, go watch all my videos, okay? I have literally thousands and thousands and thousands. I have enough videos on my YouTube channel to keep you busy. You could stare at your screen for the next 2 months, okay? And not run out of content that I've created. So it's up to you. Like, the information is here, guys. It's on my channel. It's up to you guys if you want to go and get it. If you want my recommendation, if you haven't gone through any of my videos, go to the link there's a couple links in the description to I've picked a couple of my favorite videos, what I think are the most valuable videos that I've done recently. I think there's 2 or 3 in the description, okay? One that's called Things Your Forex Guru Won't Tell You, and I think another one is called How I Actually Trade, and I've dropped major bombs in there, so go watch those. But what I'm going to drop is just one, technical confluence to my buy on Euro USD, and 2 is a fundamental / sentimental confluence to my trade, okay? So, and hopefully after this, you'll finally agree with me that Euro USD is going to be a buy and not bandwagoning it. Because you know what's going to happen, guys, is right now everybody online, and just as they have been for weeks and weeks and weeks now, everybody's saying sell Euro USD. It's going to keep going. Sell, 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 sell. Now you see everybody starting to bandwagon buys on Euro USD. You know, I called it multiple weeks ago. Now we just now starting to see the hype on social media kind of slowly starting to shift towards a buy on Euro USD, and that's all because of the Federal Reserve just this past week. But again, I have information that I'm going to share with you guys of how I know Euro USD is not going down. It's not going down. Okay, I'll tell you guys right now, Euro USD is not going down. If you have a sell on Euro USD and you're expecting it to just tank, it's not going to. Okay, I obviously can't guarantee that, but just trust me, it's not going to. Okay, Euro USD is about to make a major retracement to the upside. Okay, a multi-year overdue retracement. All right. Now you can capitalize, you can sit on the sidelines, or you can disagree with me and you can go lose all your money or lose some money, or you can listen, pay attention, focus, hear me out with what I have to say, and hopefully get on the right side. Okay. And here we go. All right, so Euro USD, I've been calling for a buy for some time now. In fact, just to even prove it for some of you guys that this might be your first time watching this, this is the first time I publicly made it an official announcement that I am looking to get long on Euro USD. Okay, I had hinted way before June 9th that you see in the top left right here. So for over a month now. Okay, so that's why I said go watch my past 4 weeks of weekly outlooks, so that way you can see 4 weeks ago I've been calling Euro USD going up, and just now it's starting to go up. Okay, all right, and Euro USD is going to, and I posted this chart of what I think Euro USD is going to do. I think it's going to go up to 120, and so it's turning a little bit complex, but this is going to happen. Okay. Brett, you said I've been talking to other traders that have been saying the dollar is screwed for months besides me. Oh, that's awesome, Brett. I mean, I'm not saying I'm the only person in the entire world or the entire industry that's short on the US dollar. I'm just talking about what I personally have seen online. And mostly what I see online is people don't know what they're talking about, and they just see on the weekly that it's been dropping for years, and that's their only reasoning as to why Euro USD is going to keep going lower. Okay, that's the only reason. But yeah, I mean, I'm sure there's probably other people out there. There's probably millions of traders out there that are probably looking to get long on Euro USD too. But then for every million traders that are looking to get long on Euro USD, there's 10 million traders right now that are looking to short Euro USD. That's what I'm trying to say. There's more people that are short on Euro USD right now than are long. Okay, and I mean, you can actually even look at contrarian indicators. If you were to go to somewhere like, watch, I'll even just pull it up very quickly before I go into this. If we go look at the contrarian indicator for Euro USD, okay, says 60% clients are long, 40% clients are short. Okay, so this contrarian indicators is telling you to short. So this is exactly what I mean. So if you guys don't know what a contrarian indicator is, well, I'm not going to spend the time and go over it. You can go do your own research. But a contrarian indicator essentially means doing the opposite. And so, I don't agree with these at all, by the way. Okay, I do not agree with these at all. Okay, and here's exactly why. Is because if you go and you read an article or you go and watch a video on how to use this indicator, okay, it tells you that you are supposed to look at how many people are long and how many people are short and do the opposite. And I know that sounds weird, but that's why I said if you don't know what a contrarian indicator, go learn, okay? This contrarian indicator is telling us because 60% are long and 40% are short that you should actually short Euro USD, okay? Even though it says signal bullish here, okay? This is just trust me on this. This is considered, this is a contrarian indicator, okay? I know you might perceive this as, 60% are long, so more people are long. That means that I should long too, right? No, that's not true, okay? Well, in this case, that's what the contrarian indicator is telling you. But in this case, I actually do agree with what the contrarian indicator is not saying, essentially. Okay. Basically, contrarian indicator tells you something and you're supposed to do the opposite of it. So I agree what it's actually telling you to do and not agreeing to do the opposite, if that makes any sort of sense. Or I might have just tongue-tied you guys. But anyways, I don't agree with those sentiment indicators. But Euro USD, here we go. All right. So first thing from a technical standpoint. Now this is going to be very, very, very simple, very basic. I've gone into some much more in-depth stuff on the past webinars, but this is just something I noticed and I wrote it down. So in 2013, we've got, I think you can see it better on, let's see, is it the weekly or the monthly? Yeah, you can see it better. You can see it on both the monthly and the weekly, okay? But in 2013, all right, so I want to just backtrack on the weekly time frame for a moment and just look at this kind of like this, all right? Now, back in 2013, we were inching our way up. We were in this like pretty significant period of consolidation, right? We kind of entered it in like I mean, it's a little bit hazy because this isn't like a textbook setup or anything like that. So there's discrepancies on when or where the consolidation started. But it kind of started in October of 2012 and lasted into almost April of 2014. So like a year and a half. Kind of like how we've had now, like a year and a half of it just inching lower. I'll show you guys on the charts right now. But it inched up higher and higher and higher. And I'm sure at this time, a lot of people were just calling buys on Euro USD, right? Because it looked like it was inching its way up. But as you probably saw before I deleted everything, I'll just go ahead and fast forward. So here we are. This is what happened after we broke out of this major, what ended up being a distribution phase for Euro USD, as we continued this giant trend. You see how it didn't just drop 1,000 pips, it dropped over 3,000 pips. Euro USD went up from being extremely way stronger, almost 50% stronger than the US dollar. It went from like the high 130s down to almost parity in a matter of like, look when the drop started, July 2014, and we dropped 3,000 pips in less than a year, March of 2015. So like less than 12 months later, we were 3,000 pips lower for Euro USD. And that came because of USD strength. All right, so Euro weakness, USD strength. So now what we're looking at, all right, so let's go ahead and just do the math a little bit. All right, look how long we've been in this consolidation for. A year and a half. Okay, February of 2018 to July of 2019. So almost same exact time that we were in. Like, look at, like, guys, oh my goodness, I cannot, like, let me just, I'm so excited when I see this, okay? Follow my cursor because I don't have a marker, okay? Look at this drop, okay? So this low that we made in July, okay? And then we made a big correction, which I say correction because we were in a downtrend at the time. So we made a big correction up, and then we came back to like an area where we were consolidating in. You can see where we made this bull flag before we spiked up. And then we came back down into this range where we were in with this bull flag, moved up higher, broke these highs, okay, consolidated a little bit up here, and then all of a sudden a free fall on Euro USD, okay? Look at how creepy this is, the exact opposite, right? So rather than this low right here, would be the equivalent of this high right here, okay, to the right. And then this spike down right here. Well, actually, we spike down and we have a little bit of a bear flag, a consolidation that happens. Look at this. We have a spike up and then a little bit of consolidation that happens. And then look what happens. We spike up past that bull flag and make new highs. So this bear flag, we smash past this bear flag and make new lows. And then we go back into this previous zone of consolidation from this bear flag. Just like over here, we go back into this zone of consolidation from this bull flag. Then for the next couple months, we just inch our way a little bit higher. We end up breaking the highs. Look what happens over here. We inch our way lower and we break the lows. And then look what happens. We get a huge drop on Euro USD. What do you think is probably most likely going to happen to Euro USD next? Okay? Use your brain, guys. All right. So obviously that is, you know, if I would have to be a joke to sit here and telling you guys that's the only reason I'm looking at buying Euro USD. Okay. That is far from the reason why I'm looking at buying Euro USD. In fact, what I'm going to show you guys now is more of a reason why I'm buying Euro USD. But Me personally as a trader, I am mostly a technically driven trader, but I also like to have fundamental backing with my trades. Okay, so this is a very nice, clean, technical outlook, a very nice, relatable setup. Um, Now, I'm not going to get into like the smaller time frame, like where's your entry, where's your stop loss, where's your take profit. That's for my students. Okay, become one of my students. Hop on my daily webinars, and you'll get all that information. Okay, that's where you'll learn about when we're talking about the July lows, June lows, yearly lows, that type of thing. Okay, I'm not here today to tell you guys where I'm going to enter on Euro USD. Okay, that is going to remain a mystery. But let me mention this also. Okay. So I want to just quickly look at the COT data. This is this is based off of the most recent COT data. I believe obviously every Tuesday is the COT report, and then it doesn't get released until Friday because the CFTC takes a couple days to review the data. So this is from the most up to date. I was just looking at my calendar. Sorry guys. This is the most up to date information. And what I really just want to look at, if you guys don't know how to read the COT report, like you're probably just going to be lost here. You're gonna. My recommendation is go learn or find somebody that's going to teach you how to read the COT report. If you're watching this, I'm assuming that you know how to read the COT report and you're familiar with COT data. I just very quickly want to look at where we've been in relationship to the past year, where our extreme net longs and our extreme net short positions are at. And we can see this kind of this dark red line right here, which is commercial traders. We can see the commercial traders. This is the key right here, guys. This is the golden nuggets right here. Is we can see that the commercial traders, from their extreme net long position that they've been the extreme net long position of the past 12 months, they have reduced their amount of longs, and you can actually see they're right almost to the baseline of 0, and they're about to be net short. And this is for the euro, by the way. This is euro, okay? And while we have large speculators, they are opposed, of course, to commercial traders, and literally completely opposed. You literally put a mirror here, and we have, while the 12-month extreme net longs are being formed from commercial traders, we have the 12-month extreme net shorts being formed by large speculators, and we can see large speculators have actually gone into an accumulation phase right now, and they are, we actually are starting to see this push up from large speculators supporting the euro. And then we're seeing the increase in net short position. So basically, in the next week or so here, we're probably going to see commercial traders turning into a net short position on the euro, which just means buy the euro USD. Okay. Now, again, this is kind of like a contrarian indicator, because you might be a little bit confused. You're like, well, you just said commercial traders are moving from net long to net short, but you just said a couple minutes ago you're looking at buying euro USD. So how does any of this make sense, David? Well, you're just going to need some help there. I could probably spend the next 4 hours going into explaining everything I just said, but I do not have the time for that. Okay, so like I said, you want this type of information, go watch some of my videos. If you feel like you need a little bit more help, hit me up. All right, I have a trading group that I work with. Okay. But guys, that is it for today. That is my reasoning on buying Euro USD. Okay, so I'm telling you right now, don't be on the wrong side of the market for this one. Okay, this is a huge opportunity to capitalize. I'm looking for at least 120 on Euro USD, so that's over 700 pips higher from where we are right now. This one trade can be the only trade that you need for the rest of the year. Let me say that again. This one trade can be the only trade that you need for the rest of the year. You can make all the money that you want, all of your profit goals, all of the realistic profit goals. Obviously, if you said your goal is to take $1,000 account and make $1 million on a trade, that's not realistic, okay? We're talking about realistic goals. Any realistic goal, target, profit, whatever goal that you've set yourself in the Forex market can be done with this single trade. Yearly goal can be done with this single trade before the end of the year, all right? Mark my words, all right? And that's really it. I'm going to end today's webinar here. Do me a huge favor. I know I've said it like 4 or 5 times, but please smash that like button, guys. If you have gotten any type of value, anything that you're going to be able to use to capitalize in the market, the best way you can just help me out and support me, if you are not part of my premium group, is just leave a like, guys. That's it. It doesn't cost you anything. It's free, and it lets this video get out to more people who are like you and would get some value out of this information, okay? And it looks like the chat room doesn't have a lot to be said today, so I'll just leave it there, guys. So have a great Sunday. Students, I will see you tomorrow for our daily webinar. Everybody else, I will see you on next Sunday's weekly outlook. But have a great week, traders, and stay safe out there. Happy trading, guys.